It's tax season, and at LifeLock, we know you're tired of numbers. But here's a big one you need to hear. Billions. That's the amount of money in refunds the IRS has flagged for possible identity fraud. Now here's another big number. 100 million. That's how many data points LifeLock monitors every second. If your identity is stolen, we'll fix it guaranteed. One last big number. Save up to 40% your first year. Visit LifeLock.com/podcast for the threats you can't control. Terms apply.
Listen, all you New Yorkers. Taxi!
Okay, we're looking around.
This is the 77 WABC minicast.
Well, Sunday morning. Every Sunday morning, John Terrett is with us to tell us what the markets did last week. Well, John, give us an update.
Good morning, John. Well, there were two big stories last week, one of them breaking late on Thursday evening, and that was Netflix pulling that $72 billion bid for Warner Discovery and paving the way for Paramount Skydance's $111 billion bid. They're getting the studio, they're getting Harry Potter, Lord of the Rings, Batman, and I think to a certain extent they're saving CNN and HBO because Netflix didn't want CNN or HBO. And so now CNN will team up with CBS News in some capacity. That's extraordinary, isn't it? Remember that Paramount Skydance is a conservative-leaning company. You've seen what they've done with CBS News already. It's run by David Ellison. His dad is Larry Ellison of Oracle. They're a bit of a team. They speak regularly. But the key thing is they both have the ear of President Trump, which could be useful when it comes to regulatory hurdles. Still several months away before we get completion of this deal. But Wall Street liked the fact that Netflix manned up and walked away. And they said, look, we're confident with our organic growth rather than through mergers and acquisitions. Because Netflix shares were down about 15%, but on Friday they were up 8 or 9% because of the move they made on Thursday night. And the other big story, of course, was Nvidia. Stellar earnings Wednesday night, saying computing demand is growing exponentially. Everybody loved it. Then came Thursday morning and the doubts crept in. Maybe this demand they're talking about is not sustainable. And what Wall Street is worried about is AI going to take all our jobs? Is it really? Is it? Also, how many software companies that both make software and use it will survive all of this? And the point is, we just don't know. Nobody does. You don't know, John. I don't know. The president doesn't know. It's all very much up in the air. And then adding to the party, Salesforce on Wednesday, big software company, Dow component, down 4% after turning in disappointing sales outlook. But then Thursday, Dell Computers, run by Michael Dell, said, we've got $50 billion worth of server sales coming up in 2026. So the AI story is all over the place, and that's why you see so much volatility.
Well, it looks like the market, like for the last 50 years, is run by fear and optimism.
Well, it is. I mean,
depends which day it is.
Well, no, but that's it. You're absolutely right. That is the tradition that we see. But one thing you know for certain is that over time, the Dow never goes down. The crypto story of the week was the White House saying, we're not going to pardon Sam Bankman-Fried, he of FTX, the second biggest crypto exchange, after he was jailed for fraud. He's been angling for that for months and months on Twitter and on X. And as you know, the markets had a pretty poor start to Friday. So we look now to the week ahead. On Monday, we get iHeartMedia. That should be interesting. On Tuesday, CrowdStrike. That's the company that caused the Microsoft worldwide outage back in July of 2024 when they rebooted their system and they destabilized Microsoft. Anyway, CrowdStrike Tuesday. And then it's jobs week again. We've got the weekly, the private, and I think, assuming the government shutdown, the limited shutdown doesn't affect it at all, we should get the February jobs report on Friday, the big jobs report. John.
Well, John Terrett, thank you so much for the update, and we'll catch up with you again real soon.
Thank you, John. See you next Sunday. Thank you.